Hello and welcome again to another of the topical tax tips from me, Bernard Critchley, tax manager at Aspen Waite. Thank you for joining us. Today I want to talk about capital gains tax, some of the exemptions available for individuals. I'm deliberately not going to talk about businesses and business assets because that's going to be the subject of another day. Capital gains tax, as I'm sure a lot of us know, is charged on chargeable gains made by individuals, but also personal representatives and also trustees, on the disposal of assets after deducting expenses of sale and also losses. And there's an annual exemption that's currently £12,300. It's important, therefore, to use the annual exemption every year, if possible, to shelter small disposals from the impact of the tax charge. Furthermore, if you have assets that are worth less than they originally cost and are sitting at the moment on a loss, you might consider disposing of the asset to crystallise the loss if you've got potential gains in a tax year in excess of the £12,300. Transfers between spouses and civil partners are exempt from CGT, so there may be some scope for transferring ownership of shares to enable both spouses to get the advantage of the £2,000 tax-free element of dividend income. If you've got just a few shares whose disposal would give rise to a gain that would be covered by the £12,300 annual exemption, you might have thought that you could sell the shares and then buy them back the next day, increase the base cost and not have a capital gains tax liability. It used to be called bed and breakfast arrangements, but unfortunately tax legislation won't allow us to do that anymore. But one workaround is to sell the shares and for your spouse to buy the shares the next day. That way you'd have the same effect as an outright gift, but the spouse would benefit from the uplift in value. I like to call this bed and spousing. Most people will be aware of the principal private residence exemption. This allows you to make a gain on your own home and not have a capital gain when you subsequently sell the property. However, things aren't always that simple, and if you have two properties that you live in at the same time, only one of those properties would qualify for exemption. Another complication arises where there's land that's around the property. Selling some of the land but keeping the house may still be tax-free, but would depend on a number of factors, including the size of the plot and what has it been used for. And obviously we can help you with any particular issues that you may have regarding the sale of land but keeping ownership of the property. So whether you have multiple properties or are looking to sell off surplus land, you should always seek professional advice. So as I say, please contact us and we can help you minimise the tax impact. Whilst capital gains tax, CGT, is considered a tax on the disposal of assets that are held as investments, the disposal of some assets are exempt from CGT. These assets, called wasting chattels because they have a useful life of less than 50 years, would include clocks, watches, shotguns, motorcycles, small yachts or dinghies, and even racing greyhounds and racehorses. Antiques, paintings, jewellery are not included in that category, as they don't automatically qualify for exemption, But small items worth less than £6,000 are exempt unless they form part of a set that is sold at different times to the same person. So this is a little way of avoiding a little scheme that you might have of, say, I've got 6 dining room chairs to go with my table. My 6 dining room chairs are each worth £3,000, but there's 6 of them. It would stop you selling them in part over the several tax years to the same person. It will be treated as one disposal in part rather than separate disposals qualifying for exemption. There's a lot of news at the moment about cryptocurrencies and non-fungible tokens. These are intangible assets. Remember what Mr. MC Hammer said about not being able to touch it.
You can't touch this.
And they're therefore not subject to either the chattel exemption or the wasting chattel exemption that we've mentioned above. If you need any further advice on cryptocurrency disposals, then again, please get in touch with us. There's another group of assets which are exempt, and they're cars, specifically mentioned in the legislation, separate from the other things I've talked about. So even if there's a vintage car, that car is exempt from capital gains tax. Although if you have a car with a personalised number plate, that number plate would not be exempt. So you'd have to split the sale proceeds between how much someone was paying for the car and how much they were paying for the number plate. So in conclusion, let's recap. Firstly, use the annual exemption every year, if possible. Next, look at matching losses with chargeable gains to reduce the capital gains tax charge. Don't forget the exemption for transfers between spouses, and if possible, have a look at that bed and spousing exemption, which is I think can be quite useful for small disposals. Make sure you get the most from your principal private residence exemption. Make sure that you have in place elections or paperwork which actually shows who owns what and which bit is used as a home and which bit may not be before a disposal takes place. And don't forget the chattels and the wasting chattels that are exempt or partially exempt there. And finally, remember to ask for advice before the disposal takes place. As I've said before, we are always here to help. And importantly, we're here to make sure that you pay the right tax at the right time. Thank you. A number of people who've seen me over the years know that sometimes I like to illustrate some of the tax planning with a magic trick. So I've got a little magic trick here just to help us explain a few things. You may have seen this magic trick before. I don't make any, it's not unique to me, but it's one I like to use. It's a simple one involving a 10p piece and a 2p piece. And this is a way of me showing the amount of tax which could be saved by sensible planning over a period of time. So I've got that 10p piece and I've got that 2p piece, and as you can see quite clearly, there's no way that I can actually get into them. But I put a glass over to illustrate the tax planning that we do. And what you do is you play around with the events over a period of time. And then what happens is, when we're all settled and we have a look at the final thing, we see that what's happened is we've managed to save a considerable amount of tax over the lifetime of our transactions. Things are possible when we plan ahead.